You were listening to Charting Wealth for Tuesday, the 7th of February, 2017. We always start with SPY. It was of all of the indexes and commodity and bond that we review, it is the only one that is down. What do we see going on with the S&P 500? Down 0.18% for the day, still above the weekly trend line. We have been underneath the PPO, crossed over going down on the 2-day chart all the way back on the 30th of December, and it's really just been sliding sideways, although it has been meandering up. Why has it been doing that? Because it crossed over going up back on right toward the end of November on the weekly chart. And remember, all things being equal, the markets always tend to move in the direction of the largest chart until they don't anymore and it changes over going down. Well, that's not happened. The 2-day chart has, but there's not been enough down movement to drag over the weekly. So what happens? The market continues to move up. Now remember, we try to be experts in trend following, not in predicting the trend or where things are going to go, but once that occurs, following it. And I'm so pleased to show you where we are on the next chart, because as those of you who followed us for a while know, we have made it our purpose in trading and in life and in studying this stock market to figure out how best to track trends. And what we have seen and we've started doing, we're going to provide this to you every month. I'm getting ready to tape it tonight, and I'm so excited. Remember when we called the weekly crossover. In fact, I'll go to the weekly chart on the Qs. And what is the Qs? That's the NASDAQ 100. Remember when it crossed over going up after a long time? It just couldn't seem to cross over. Finally did cross over on the 6th of January going up. We then entered into a trade on the 30-minute chart at 10:30 the following Monday. What have we seen happen since then? Well, we got into that trade on the Qs at 122.07 on Monday the 9th. We have seen from that point, 122.07, to the height that it hit during the month, and again, we're just recording our success and results in January. The top point it hit in January was 125.92. That was a gain in that short period of time, less than a month, of $3.85. It actually ended up being a 3.15% gain just during the short time period from the max it hit during the month and our crossover entry point. We are rather proud of that, and we actually are going to continue to track those things. That trade is still, of course, underway. Now, we do, again, we are continuing to monitor. We're getting very long in the tooth on the 2-day chart. It is, as we look at it, derivative oscillators losing energy. The PPO is not climbing at the level it was when it reached that peak. So again, we've been giving some warning signals that we get concerned after we've already topped out and we're not seeing a lot of movement. Still can go up. In fact, if we look back to our weekly chart, we can see that the weekly chart itself is continuing to build on the derivative oscillator, and we see that the PPO, the price percent oscillator, is continuing to climb. The red line that we have drawn, vertical red line that we've drawn on our chart, shows the high point that we reached in the prior month for that buy-in. Okay, let's go back to our 2-day chart. So we're continuing to see how indeed that progresses. Now we're going to move on from the Qs to TLT. What do we see going on TLT? Well, of course, over the past week, we had a vertical crossover going up for the week ending on the 3rd of February. We've already gone ahead and drawn that vertical crossover in. And the only caveat we have on that gives us a little bit of concern is that the derivative oscillator has moved negative and we see the PPO sliding directly sideways. So that is of some concern to us on that 2-day chart. However, of course, when we look at the way things are going on the weekly chart to this point, the weekly chart, as far as the indicators go, we see an uptick in the PPO, the price percent oscillator, and we see the derivative oscillator at least gaining a little bit of energy. It's not decreasing yet, but we do have some concerns because of the 4 running candlesticks, although so far for the week, that is a green candlestick, and for the day, TLT was up 0.61%, 0.61%. All right, lastly, we're going to go to gold. This is another success story. If you recall, when we called the gold crossover on the weekly chart, gold crossed over going up on the weekly chart back on the week ending the 27th of January, actually reached a high point on the 31st of right at, I'm looking at my notes here, reached a high point in gold of 115.82. Again, we entered at 113.57 and 115.82. That was a $2.25 increase, and of course a 2% gain for just that very short period of time. And again, that was the only other actual buy that we saw during the month of January using our weekly crossovers. That was in gold for a 2% gain, and in the Qs for a 3.15% gain. So gold is doing what? Well, gold is continuing to go up. So again, where did it end the day on? Well, the high so far reached on the present 2-day candle is 117.75. Now again, that's $2 higher than the 2% gain that we had in January. And we're going to continue to run these things down every month. The way that we'll look at gold over the course of February is we'll take the high it hit in January so we don't claim a gain that we did not see. We'll take the high it hit in January and the progression on and tell you how much more gold actually gained. Folks, these charts are important. These charts, again, we're not trying to predict the future. We're trying to find trends and ride them until you can't ride them any longer. It is the easiest way to try to follow these markets. Again, you can't predict what stocks are going to do, and bonds and commodities. And again, we deal with all three here, don't we? We deal with the S&P 500, which is a stock index, the Qs, which is the NASDAQ 100, and we deal with the 20-year Treasury bond, which again has hit a bottom, and we also deal with gold, a commodity. So we've got bonds, commodities, and equities. And again, folks, it is fun to watch these charts, to pay attention, and to see the type of chart reading that we're doing that has succeeded so well in the last month. Now, again, we are not a stock calling service. We are not giving you this information for you to go out and rely on that to try to make money in the market. We're all about helping you learn how to read these stock charts, how to follow trends, and how to practice. That's what we want you to do. We want you to follow with us every day. When we start talking about buy-in points, we want you to take that virtual trading account you've opened at any of the online brokers for free, and we want you to go in and actually purchase those exchange-traded funds, whether it's gold, whether it's TLT, the bonds, whether it's the S&P 500 or the Qs, and watch that virtual stock purchase increase in value, sell it at the right time, lock in that profit, and get good at doing this. When you get good at doing it, when you learn all you can learn from us and anyone else, reading books and following the Stock Trader's Almanac, doing all the things that you can do and should do to wisely increase that knowledge base, when you feel like you have enough skill, then and only then do you make up your own mind. Again, I will reiterate, we are not a stock calling service. We are not giving out investment advice. Okay, folks, and those disclaimers are everywhere. We so appreciate you being with us. You appreciate what we do. If what we do excites you, let us hear from you. You can go to chartingwealth.com, sign up for our daily podcast. You'll also get the comprehensive weekly review and forecast once a week. There you can also, if you subscribe to our email, you will get not only the podcast in video format every day, you'll also get our How to Read a Stock Chart video. You'll also get our layout that we use at freestockcharts.com. And in addition to that, you will get the daily market worksheet that we so encourage you to fill out and use each and every day to supercharge your training. That's where we are, folks, at the end of the day on a Monday as we go into Tuesday, the 7th of February. Thank you so much for being with us. If you appreciate what we do, please go to our Facebook page, subscribe. Go to our YouTube channel, big time subscribe. You can like our Facebook page. Subscribe to us at our YouTube channel, and please, by all means, go to iTunes, subscribe to our podcast, give us a 5-star rating, say something nice about us. You guys have made us as high as number 6 in the world when it comes to stock market podcasts, and we so appreciate that. And I know with these latest figures of success we have on just 2 trades from January that those of you who follow us religiously every day saw, people are going to be coming by droves. So share this information with your friends. Use it, practice it. When we say use it, we mean practice it. Get good at this, and then and only then, when you've amassed all the knowledge that you see fit, can you own your own, make your own investment decisions. God bless. Thank you so much. Take care from chartingwealth.com.